Welcome to this week's Forex forecast for the week ending March 3rd, 2023. My name is Justin Bennett with Daily Price Action, and in today's video, we are going to talk about the dollar, the S&P 500, the euro, the pound, and also the Australian dollar. Now, before we get started with today's video, I do want to point out that we are coming up on the last 24 hours or so of the current sale I'm running on the website for lifetime access. Now, this is the last time that I will be offering this type of lifetime access, because starting next month, we are going to a yearly and monthly subscription model. So this is going to be the last 24 to 36 hours that I am offering this lifetime membership. So if you're on the website, click that join now button up in the top, or if you're on YouTube, there will be a link in the description. All right, so with that said, looking at the DXY here, the US dollar index, we have a lot of indecision out there in the markets right now. I want to say that first and foremost, because right now markets are kind of at this pivotal point where I think the next 24 to 48 hours could decide where we go for the next couple of weeks, and the US dollar is no exception. So starting here on the weekly time frame, you can see where the DXY came into this resistance area last week. Now, it did close the week above 105. However, 105.60 is also a key level. So what we can say for the DXY is that 105 to 105.60 is going to be key resistance. Now, if we look at the 4-hour time frame, I talked about this last week, but you can see where there is a potential rising wedge that formed, okay? So off of several of these lows, you can see that we do have a trend line down here, so trend line support. And you can also see where the US dollar index tested that level today, right around 104.60. And currently it is finding some support there. We are seeing a slight bounce from the dollar. However, you can also see that off of this trend line here, this trend line resistance, we saw the DXY breakout on Friday, close the week above this, and also 105. However, like I said, 105 to 105.60 is resistance for the dollar. So sure enough, we saw the breakdown this morning. So a bit of a rotation lower here from the dollar. But again, it is finding support right there at trend line support. So what I would say for the dollar is this. I think the safest play right now, if you're looking for weakness from the dollar, basically the market has to close below Friday's open. Okay, so this level right down here around 104.50 or so, you can see that that's right where the dollar found support today. That right there, if we see the DXY close today below that, then it would indicate that this up here is a fake out and likely send the dollar lower, potentially down toward about 103.50. However, if we got that kind of fake out, I do think we're looking at least a move down toward about 102.60. Now, alternatively, if the DXY can reclaim 105 today, so if we see a late session rally and the market closes back above 105, all right, that's going to keep pressure on 105.60, which, like I said, is a daily pivot for the DXY. So you can see back here, 105.60 has been critical on the daily time frame. So this is what I mean when I say that there is a lot of indecision out there from these markets, because on the one hand, the dollar, which drives much of the Forex market, is looking rather weak with this potential fake out. But at the same time, we do still have the market finding support down here. And it also hasn't closed the day yet, so we're not sure, exactly where this market is going to end here over the next few hours. But again, I do think that 104.50 is going to be one to watch. That Friday open, if we see the market close below that, I think we have a fake out on our hands and the dollar weakens this week. So next up, I want to talk about the S&P 500, which a lot of Forex traders don't consider this when they're trading currencies. However, what I do want to say is that something like the S&P 500, or really any popular index out there, equity index, is going to give you an insight into whether we're looking at risk on or risk off. And what that means is if we're looking at risk on, okay, you're going to see the S&P 500 and other equity indices rally and also the dollar pull back. Whereas if we're looking at a risk off scenario, you're going to be watching markets like this pull back and also the dollar rally, which means currencies like the euro and the pound likely suffer. So something like the S&P 500 can give you a ton of insight into trading even things like the euro or even the dollar yen. So basically, right now, the S&P 500 here with the SPX500 is coming into some support. We saw this tested on Friday. I talked about this at length on Twitter, where you can see the market tested that 39.40 level exactly, which is the all-time high trend line. So this is an incredibly well-defined trend line off of that all-time high. And currently, the level on Friday came in right there at 39.40. However, going forward, it is going to be a bit lower, right around 39.30. And you can also see that we do have a trend line off of the daily close, or several daily closes back here. And also these lows, that comes in right there in that same area. So this right now is a confluence of support for the S&P 500. Now, the level that bulls have to get above for the S&P 500, you can see right here is 4020, okay, 4,020. This is going to be the key for the S&P 500 and really risk assets as a whole to turn higher toward 4085. Okay, this level up here, now 4,000 is also significant. You can see that this is a minor pivot going back here, and we did see Friday close below that. And sure enough, this week so far, today, we are seeing some resistance between 4,000 and 4020. So once again, even the S&P 500 is showing us a lot of indecision between this area down here right around 3930 and also that area between 4,000 and 4020. So essentially, until we see a higher time frame close either below this area, okay, break this support down here, or above 4020, somewhere up here, then this market is just range bound between these two areas. Now, if we do see the close back above 4020, okay, a daily close back above this area sometime this week, that would expose 4085. Alternatively, if we get that higher time frame close below this area down here, especially that all-time high trend line, okay, that would open up lower levels here for the S&P 500. And honestly, I think that would be very bearish for risk assets as a whole. So if we were to see that, I do think we're seeing the dollar rally, and likely the S&P 500 coming down here to take out some of these lows. So next up, we have the EURUSD, and this one is really interesting because last week I mentioned that we did have a potential falling wedge here. Now, the market came into the very apex of this pattern. So the first thing I want to say about this is anytime you see a market come to the very apex of a terminal pattern like this, you have to take it with a grain of salt because in my experience, a lot of times when you see this pattern becomes less effective, okay, less reliable. Now, with that said, we do see here that the EURUSD is closing or about to close a 4-hour, above this area down here, okay? So this level right here around like 1.057, maybe 1.058. To me, this level down here is going to be the key level to close above on the daily time frame. All right, so if we were to see that from the euro, you've got to be a little bit careful if you are bearish here, because as you can see, we do have a potential bullish engulfing candle. Now, obviously, we have this low from right back here where the market is finding some resistance right now. So what I would say about this, just like the DXY, how I mentioned Friday's open price, is with the EURUSD, this level right up over here around 1.0615, this is going to be the area that the euro needs to reclaim. Okay, so yes, we do have a potential bullish engulfing candle, but I think that if we were to reclaim this low back here on the daily time frame, that flips to support, and I do think we could see a rally from the EURUSD potentially back here toward this area. So right around 1.074, potentially up there toward that pivot, right around 1.078. All right, so you've got to be a little bit careful here because like the rest of the market, there is a lot of indecision currently because we do have a short-term downtrend for the EURUSD. So you have to keep that in mind. However, at the same time, we also have a potential bullish candle forming. But like I said, I do think that 1.0615 is going to be the level to take out to see the euro rally even higher. And also too, just because the market has been so sideways, you've got areas like this down here that you have to keep a very close eye on. Okay, so even if we got the reclaim up here, you've got to keep an eye on this area around 1.067 just based on all of these lows back here. Now, alternatively, if we do see this downtrend continue, either from this resistance or this one up here, you're going to want to keep an eye on 1.048. Okay, I think that that's going to be a very significant level for the euro. You can see we've got the bottom of this equidistant channel and also this horizontal pivot right here at 1.048. Okay, so if we do see a continuation lower, either today or later this week, this area down here is going to be one to watch. So next up, we have the pound, which is actually looking really strong today, bouncing from that range support that I've talked about for the last month or so. So we can see that the pound has been within this range ever since back here in late November. Now, range resistance comes in all the way up here around 1.245. Now, we saw the market rotate lower from 1.213, which this is the area I talked about recently. You can see that this has been a pivot for the pound. We saw a little bit of a close above it back here. That became a fake out. The market came down, tested range resistance, and then found resistance at 1.213. Okay, so going forward, I do think that 1.213 is going to be one to watch as resistance up here. And of course, support comes in down here at 1.1915. Now, one thing you could do here is draw a trend line from this high up here. The one thing I will say though is trend lines tend to be a little bit more subjective than horizontals, and you can see that even on the 4-hour time frame, this is being respected. Okay, so if we move this up here to include this high, so essentially you've got this high back here, this one, and then also this one here, you can see that resistance right now comes in right around 1.2065 or so. Okay, so this area right here is going to be resistance for the pound. If we do see a close above that, that could open up 1.213, but just keep in mind that the market is still just very sideways. All right, so not ideal trading conditions right now for the pound, or really, to be honest with you, any market out there, just because of all the indecision that we're seeing. And lastly, we have the Australian dollar, which you may be looking at this and wondering why I have all these levels down here, all these support levels, and that's because of all this congestion that we saw at the end of last year. We have support that ranges between 66 and 67. Okay, so really you're going to want to treat this area, this entire area, as support just because of all the lows that we have back here during this congestion. Now, with that said, this is a market that played out really perfectly for us here. If you saw last week's video, what I said is that this Friday candle, even though it looked rather bullish, in my opinion, it was not, simply because the market was trading below the bottom of this equidistant channel. Also, the fact that it was on a Friday, and we know that Fridays tend to be lower volume, which means lower conviction, and the fact that the market was sideways. Anytime you get a candle like that in sideways congestion, it is less reliable. All right, and you can see where right here last week, this is what I talked about. This level up here, you can see that's right where the Australian dollar found resistance, and we got a nice sell-off. Now, the second chance opportunity was the close below 687. This is the horizontal level that I also talked about. And you can see that right here on this candle, we got the close below and the sell-off right down here toward this first support area. So I think that from here, it's going to be a little bit tricky to trade this pair. I think if you miss this up here, this right here, or even this, was the opportunity for the Australian dollar. Right now, with the market coming into the support area, I think this is going to be really tough to trade through here just because these levels are so tight. Now, of course, if we were to see a rally from the Australian dollar, okay, a dollar pullback maybe, the Australian dollar comes up here, tests this area again, that could provide another opportunity for that leg lower back here towards support. But I think that as of right now, we're probably looking at a range trade either between 67 and this area up here around 687, or potentially we get a move down here toward one of these levels. But when you look at this back here, right, it does kind of seem like the Australian dollar has entered a new range. So I think that this is what we should expect over the next couple of weeks. All right, so that's it for today's video. I hope it helped. And once again, we are coming up on the last 24 hours of the sale I'm running this month for a lifetime membership. It's the last time I'll be offering this ever. So be sure to check that out on the website, where you can get access to our Discord group that I'm involved in every day. And we're also going to be talking about Forex and crypto in there, plus 2 videos a day for members. All right, I hope this was helpful. Trade well out there this week, and I will talk to you again next week.